Gold is pulling back a little off the pre-highs of the overnight. But again, let's go to that gold chart. What I love about this is just its continued strength, right? Here's your pivot high. So far, we're dangling right at that level here, trying to break out. If this breaks out, guys, by year end, we should easily see that the all-time high. I do think so. All right. So again, gold continues to be one of my favorites. You guys know that by now. It's I would view it as one of the lowest risk places to get potential solid upside relatively safely, right? It's not like gold all of a sudden, knock on wood, is going to drop 20%, right? Versus a Bitcoin could do that. As much as I think it's the future digital gold, Bitcoin could drop 20%. In fact, it would be almost unnatural for it not to have a 20% drop at some point in the future. Bitcoin is starting to come down just a little bit, guys. If I zoom in on the chart, we continue to be stuck in this wedge pattern. I think it's amazing to watch a wedge pattern work its magic. And the reason I say that is because, again, it keeps looking like it's going to break out, and then the level gets rejected over and over again. We've now rejected it 3 times. Now, this is the beauty of the methodology, folks. What I refer to the Winning Trader series is that I want you guys to think about putting the pieces of the puzzle together. So we've now hit 1, 2, 3 times. Remember when I was talking about hitting a trend line, breaking down the door? So we've only hit 3 times. So did you really expect it to break out after 3 hits? And the answer should be no. Probabilities tell us that you have to hit it 4 or 5 times to get a breakout. Same thing on the downside. This is kind of just considered one long one, but 2 and 3. So you've now essentially hit 3 on the top, 3 on the bottom, which tells us that it's very possible one of the next hits, either the next one or the next one after that, 4 or 5, creates either the breakout or the breakdown. And again, I think this is so cool to be able to put the pieces of the puzzle together from the last example I showed you over on the other side with this, because you can see how it's working its magic again and again and again. Freaking cool, guys. Freaking cool. All right. Anyways, so that's where we are at this point. One thing I want to point out to you, if we pull this chart back, there's a point where the wedge pattern, it's right over here. It's December 18th. So what I'm telling you here is that by December 18th, this chart will either have broken out to the upside or to the downside. That's it, because these lines are meeting over here, right here, and it will force price out one way or the other. Now, probably the breakout or breakdown happens ahead of that, but again, I wanted us to just be aware of that. Silver here has broken out. We talked about this on Wednesday and Friday. It continuing the breakout here. This is that channel that gold had broken out a while ago on. This is now on silver breaking out. Now, you are coming into some resistance on silver, right? So you're not quite there yet, but I do want us to be aware at around 25.15, that'll be your next point of resistance. Basically, taking this high and into this area, that will be right above $25. So right now we're at 24.77. The resistance level will be at right above 25. Do I expect for it to eventually get beyond that level? The answer is yes, but it may need to check back. So it would be very common for it. Let me go to this side here. It would be very common for us to break out, touch resistance, then check back to the line here, the scene of the crime, another key term I want you guys to be able to learn, and then the breakout can continue to the upside. That's exactly what gold did. Gold checked back, same kind of deal.
Hey, crypto legends, welcome back to Crypto Street, or the wild ride through the crypto jungle. I'm your guide to the coin universe, and today we're unraveling the mysteries of Bitcoin's hash rate, the ETF excitement, and some sizzling altcoins. Buckle up, it's going to be a crypto roller coaster. Focus, folks. Bitcoin's hash rate just hit a jaw-dropping 480 quintillion hashes per second. That's like breaking the sound barrier in the crypto world. This power surge is like Bitcoin hitting the gym, flexing its muscles for BlackRock's ETF nod. Colin Brown even tweeted it, or making history. Bitcoin's like the comeback kid of 2023, clocking a 100% surge this year. But wait, the hash rate surge is giving miners a run for their Bitcoin. Some are sweating bullets, exploring Plan B, or cashing out. With a 169% WTD hash rate spike, analysts are eyeing a potential price shakeup. Brace yourselves for a crypto earthquake. Miners are partying hard, raking in a sweet $46.8 million. They're rewarded with 6.25 BTC for every successful block. Why? because big shots like BlackRock are eyeing the crypto dance floor. Bitcoin danced past $31,000 after BlackRock whispered ETF to the SEC. Now, everyone's joining the party. It's like crypto Coachella. Hold on, Crypto Street investors. The fourth Bitcoin halving is around the corner, scheduled for April. Miners are prepping up with fancy equipment, but, and it's a big but, climate regulators are giving the stink eye. It's like a crypto blockbuster. Action, drama, and a touch of environmental suspense. Now let's talk altcoins. Aptos is shaking hands with Alibaba Cloud, marching into the Asia-Pacific. Dogecoin's doing the comeback dance, makers hitting yearly highs and phantoms breaking transaction records. It's a crypto circus and each altcoin's got its own act. And there you have it, crypto explorers. Bitcoin's flexing, miners are sweating, and altcoins are stealing the stage. Now let's continue our enlightening discussion with Gareth Soloway.
Dollar-wise, take a look. I've been bearish on the dollar. I continue to be bearish on the dollar. Yeah, you have some supports here, right? We've broken this key level, so we know that that technical level came down. Notice how it came down here and then did a classic retrace to the scene of the crime and then continued on. If I zoom in a little bit here, real quick, just to show you. So here was the consolidation, the breakdown, the retrace to the scene of the crime, and then the continuation there. And I continue to think the dollar probably heads a little bit lower. Your short-term target is going to remain right at this trend line. This trend line is a major trend line. If I zoom out, I'll show you why it's a major trend line, because look at how far back it goes. And for those of you that are wondering what makes a major or a minor trend line, the answer is pretty simple. It's that, very short-term connections on pivot points on the chart are going to give you more minor technical levels. When you go back on the dollar chart to 2021 and you have this pivot low and you connect it to the secondary most dramatic pivot low, what do you think that's going to do? That's going to create more of a major technical level. So if the dollar does fall into this, you should get some sort of bigger, longer, sustainable bounce versus a shorter-term trend line. This you could look at as a shorter-term trend line. Look at how far back you only had to go. Basically, you just went to earlier this year, right? Right through here, you even chopped through, then you reestablished. Only minor right there. Same thing with this pivot high right through here, right? Only minor there. Therefore, it broke a lot quicker. That's golden nuggets, by the way, in terms of education, understanding major versus minor technical trend lines. All right, so Black Friday sales were wonderful, or at least solid so far, even though the consumer continues to just basically put on more and more debt, which we know is unsustainable, and also do this buy now, pay later stuff. By the way, buy now, pay later stocks, I would be very kind of hesitant if we are headed into a recession to invest in them. So that would be something like Affirm and some of these other stocks. And the reason why I say that is because at some point when we hit a recession, people are just not going to pay for those items that they got, right? Again, it's a model that works in a bull market or in a strong economy. In a weak economy, those companies are going to take massive losses because people just will stop. They'll cancel their credit card payment, whatever they have to do to stop that payment when they run out of money or they lose their job. So just something to keep an eye on there. But Amazon, we'll see what Amazon's numbers are here overall when they come out in terms of sales for Black Friday. But the first thing that I'm noticing is, again, we are still into some very important resistance on the chart, but we're butting up against it. So again, if I put a trend line right here, we can see it goes all the way back to 2020. I think this is an amazing trend line here because of how far it goes back. So here, right through choppy here, then it reestablishes, and we're right here. Now, the more a trend line hits, the more possibly it can break out. So again, the idea being is when you have resistance and you're hitting it once, twice, 3, 4, eventually it breaks out because that resistance level gets weakened every time it hits. Same thing with support, but in this case, this is resistance, right? So again, it was support, right? Bouncing, and finally broke through, right? Look at how many times it hit. And by the way, I use this in my methodology all the time to understand when a chart may be more probability prone to break down. All right, in this case, it broke down. Now, what do we know about support? This was support. It now becomes resistance. So when you break and confirm, it now becomes resistance. Well, look at that right there, right? So down here, 1, 2. So you're at a point where 1, 2, 3 hits of this trend line, you're getting to a point where the chart is weakening that trend line. So again, it may still check back a little bit. That's my expectation. But if it hits again, it wouldn't surprise me if Amazon moves higher in the near term. Short-term resistance is going to be somewhere in here, kind of right around that 160, 170 level. But again, a gold nugget of education right there as well in terms of hitting a trend line. When does it weaken? It's usually the fourth or fifth time that once it hits 4 or 5 times on a technical level, the probabilities start to exponentially increase that it's going to bust through. I love my kind of door analogy, which is, again, and I've said this before to you guys, if you have a door in front of you and you got to save your family or your cat or your dog on the other side from a burning house, like, you're going to ram that door as hard as you can, and probably the first hit may not bust it down. But by the second, by the third, by the fourth, at some point, that door is going to give way and you're going to get through to the other side. And so the same thing, the same thought process works for trend lines.
That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.